Welcome to TradeTheMBI.com. This is John. This report is for the 7th of May. Well, we started off with that little dip within the weakness that we were seeing here, but we had short-term buyers coming in right at the same time, new fund money, and that's enough to support it. We were also looking at that dip that took place, and we could see that we were likely to get a rebound effect. In fact, I was pointing it out on the 50K. They had taken this right all the way up, but given the way the stop parameters are, it's not as active as on the 5K. Merely bought right back, pretty much at the same exit point, and here we are, almost, well, right back where we were. So that should negate that entire discounted move, so to speak. Still within the weakness, but the short-term buyers were enough to elevate things and keep it going, and plus you had the rise in shorts, and that was enough fuel. Right off the 76%, we had dipped below, almost got to what I was looking for, was right around that 76%, down at 71, but it stopped right around that 83 intraday. And likewise here for the NASDAQ, which was much stronger. Didn't present as weak a case, and it's that divergence sometimes that will, when markets aren't aligned directly, you get competing interest, and this one was really good because even in the weakness stayed above the ABM and then continued to rebound off the new money funneling in, and then the euro maintaining itself right along there as we've been seeing a steady rise in the DOC. It's not enough to really propel it into anything stronger until we see that DOC red take an uptick above the negative 7.5. But enough short-term interest, keep it elevated. The trade concerns obviously suggest that maybe there would be some U.S. slowing, so it's an opportunity for them to, cover off the bottom of that euro setup. And gold still unable to get anything going at this particular point, though the break into the new zone with the DOC red might give it a little bit more of going forward. So from an intraday standpoint, it was quite interesting. If we go back a little bit further from where the dip was, we started that build that was taking place right at the bottom we talked about, and we were looking for at least a move to the 50%, which was at that point up here. Got right to it, and interestingly enough, right as we were getting to it, you might consider something like this a DOC spread. The biggest problem you've got with that is that magenta above the plus 15, and at the same time rising of gold. Not something I would typically be shorting into. In fact, I'd be looking for the bounce on that one to go in the upstream. And the same situation happened right over here, similar one, but things start to change as we end up with this one right here, because we're starting to get below, and this is where I would begin to get active within the short confines, and then when this DOC spread takes place. And likewise, again, you're looking at a situation where that steel comes from underneath sharply and begins to spike up after the nice decline. When you get these kind of flat moves with the DOC spread, they don't tend to give you as much, because what you really want to see is that move from above the red coming below. These usually tend to have a little bit more strength to them, and even with it popping right back up towards the highs, still finished by coming all the way down to the 50% mark, which produced another rising DOC red with the X's, and that led to a nice bounce towards the end of the day, only to be met by soft DOC spread right here where you didn't have the move coming back above, but then this one where the steel moves above the red, dips below, boom, right at the 76%, and that one led to a beautiful decline, which was meant by a series of buy setups, and then eventually the new buy that came up right down here at the 23% range, and has seen the spike coming right off of it. So those are neat little keys to see happen from an intraday standpoint, to kind of give a heads up on when short signal coming through is more or less, one of those where you can either tighten your stop. In some cases, I even consider what I'll do is I'll exit and then just look for the re-entry, because if I'm taking it up, near the highs, I don't mind, because then I can always buy back in again, coming through on the long side. Makes it easy to do that kind of setup. So I think it's worthwhile in being able to recognize those kinds of changes in relation to what we look for. That clean move from DOC steel coming and crossing back below. It makes a difference because you can see from that softness period where you might get a little bit of move upside. For me, when I see them, I like to start, preparing. And whenever I can get that range somewhere between the halfway point of a 100%, 76%, particularly if there's an ABM yellow up there, really helps. But in this particular case, that was fairly clean. No objections to it whatsoever. And that's pretty much where it puts us. I mean, we've come from some what appear to be news-driven events, but also in association with that new fund money coming in, and they looked for a discount. So you get these dramatic moves because they can drive it, particularly in after hours like this, and then you just get the normal buyback situation coming right up as they look for stops to be hit, and then do that little liquidity run where they're just trying to check out weak hands. So all in all, great start volatility-wise to the new month. Just what we're looking for, and just worth taking advantage of those signals as they come through. I will update any pertinent details, but love to look at those kinds of situations that we described here, and something to play back for yourself and or look into when you're looking at overall charts, because I think it'll be very helpful going forward. As always, trade well, and we'll talk again later.